Welcome to Yellow. My name is Neil and we are at the beautiful Onyx Resort in Bali. We are media partners with XFounders and we are covering their 4-week boot camp with founders in the crypto space. Okay, we are here with Diego Martin, CEO of Yellow Capital, a leading market maker in the crypto space. Diego is a mentor at XFounders Season 4. He's just done a talk on market making, which was very well received by the founders here. And Diego, I found your talk very interesting, and I appreciated your honesty and your openness when it comes to market making. So I think let's make this session about market making. I think it's something that is a little bit of a misunderstood concept. And you mentioned a few little secrets that you didn't really want to share about the industry and the business. So let's start from a founder's point of view, since we're here at XFounders. At a high level, what is market making in your 30-second pitch?
I think market making is all about providing liquidity on both sides, making sure that illiquid markets become liquid, and being able to allow traders to both buy and sell without big significant price changes.
And in your talk today, you spoke very much about this recent crash which has just happened, and there was a lot of speculation in terms of what caused it. And obviously the first thing was Trump said this, Trump said that, but you said something very interesting about it's actually not big bad orange man. There was actually something else in your opinion or in your thesis what was going on. Maybe you can explain how you think what exactly happened.
Yeah, obviously, I think there was something bigger than Mr. Trump doing one of his techniques. I think, obviously, the catalyst was Trump talking about the tariffs, but it was widely used as a first spark into what became a liquidation cascade. I think exchanges, prop traders, I think a lot of participants looked at the market. They were seeing that everyone in the market was long. We had Bitcoin at all-time high. We're very close to it. We had gold at all-time high, very close to it. The real estate market everywhere is popping. We have SP 500 popping as well. And then we have debt which is at all-time high as well. We have the M2 index, the liquidity index at all-time high as well. So I think obviously Trump caused this small spark, but then it was used by very intelligent people to create a false hope of what became a cascading of liquidations. I think everyone was very happy in the market with a lot of longs. 90% of the market was longing on long leveraged positions. And I think powerful entities or powerful traders understood that they could clean up the slate. And with all the perp decks, with all the different approaches to leveraging futures, etc., a lot of people don't understand how isolated market, cross-market works. And, these people took advantage, aimed at liquidating every single one that were on the longs, and took some advantage to manipulate the market. Of course, ADL helped. ADL is auto-deleveraging protocol that exchanges use in order to protect themselves as a security bag when they can't match the price impact of the liquidations. There was USD, the pegging, there was Oracle failing, there was a lot of things happening, but I do see a bigger power being used to manipulate the price and get people out.
This market-making industry, is it all algorithms, or is there some man pressing a button in the background, and are they coordinating? And is fundamentals very important? In other words, are they looking for the word from Trump, and they've got a strategy for it? So is it reactive, or is it all sort of pre-programmed and built into the way this whole thing works?
I mean, I think there was some programming for this, right? The biggest liquidation in history, 10 times bigger than the previous one. I think like 12 or 15 times bigger than the COVID crisis. It's not something that just comes with Trump doing one of his politician speeches about tariffs and China, right? I believe obviously it was programmed. I believe, market making is a big word, and Liquidations is a big word, so we would need to dive deeper into what this means. But of course, I do think it was programmed, yeah.
Programmed, okay. And when it comes to selecting a market maker, there was a few points you mentioned again in your talk today, particularly around investment and how actually that's not a good thing. But in terms of, say, 5 criteria when selecting a market maker, what is that, those points that a founder should bear in mind when selecting a market maker?
Okay, I think firstly, you need to understand what they are selling and how they're making money, right? If a contract or if a proposal looks too good to be true, it's probably too good to be true. There's probably some playing around. Market makers are companies that don't like to lose money. They don't like to be on the risky part of the sledge. They're used to making a lot of money. So whenever they're taking risks, whether that's through investments, whether that's through liquidity provisioning, you need to understand, set certain KPIs, and as a founder, before launch, spend some time understanding the market making business. How does it work? How is it operating? And what risks do you have? I feel, there's a couple different ways to protect yourself. Alignment is fundamental. Alignment doesn't need to happen through investments. Actually, investments could be a misalignment in market making, where a market maker is positioning himself as on the risk sledge by putting some capital on the line. And he might be aligned in that way to grow, or he might look to extract that same value that he's investing as early as possible to recover from that loss, which can be used as a sales technique. But I think, founders should spend some time learning what market making is. Especially they should spend some time learning how market making differs from prop trading and market making as a service. And maybe we should define what these two things are.
And from the conference point of view, you're a highly respected individual in the crypto space, very well known, and you've done a few mentorship sessions today. From your discussions with the founders, what would you say is their biggest need, or let's say problem that you picked up from talking to? I think you had 8 or 9 meetings today. Is there a common thread in this market that you picked up in terms of a particular problem that they might be facing?
I think everyone's looking for fundraising. And fundraising is a big word. When you're in investing, everyone explains and tells you about this big word called diversification. And diversifying is obviously a good thing when you can manage, when you can understand the risks, and when you have a risk management protocol. But sometimes, from the VC perspective or from the investment perspective, some venture capitals would rather go for one big bet or a couple big bets rather than diversifying too much. We're currently in a liquidation market, so fundraising and the opportunity cost of maybe deploying some capital on an early stage startup that you don't really know if they will launch when they want to launch, or you don't really know for how long your capital will be locked, needs some thorough thought, especially in such an incentivized market where it's not that difficult to actually generate some money, right? You have DeFi strategies, you have delta neutral strategies, you have some easy risk management solutions that don't require that much risk for you to generate some good cash flow. So I think focusing on revenue generating, focusing on companies that can actually bring some cash into the table is very important. And secondly, something that I've seen here is also a lot of projects that don't need a token. Obviously, the token business is a difficult business. Tokens also need to be treated as a product. Tokens need to be studied thoroughly. Whether projects like it, founders like it, whether they're CTOs or CEOs, they need to understand that the token will be speculated upon. It's very important to understand that value creation mechanisms and value accrual mechanisms need to be worked on very thoroughly through economic formulas to understand how mature does my product need to be for me to be able to launch a token and support it from the economic point of view. Does it match my emissions? Is it going to be sustainable in the long run? Where is my buyback program? And most of them play the speculation hype game, which is completely fine. Honestly, I think most of the tokens launched out there have potentially 99% of speculation on play. Users are not really users. They're either farmers, or the product is not as sticky for them to stay on after the incentivization. So they need to study everything, all the worst possible scenarios, and have everything prepared before their launch.
And Diego, as a CEO of a leading market maker, not a founder of a business yet, but as a CEO of a leading market maker with a global team under you, what's the biggest lesson that you've learned as your time as a CEO? What's the most important thing that you've learned in terms of running a business?
I think a lot of what I've learned has been to look at the high level. Sometimes taking some decisions or delaying some decisions might be actually more costly than making a mistake. Waiting for validation, waiting for cross-checking and for cross-reference might mean that you lose an opportunity in the market. And that might be more costly value-wise than actually not taking that opportunity and seeing if it works. So by actually not spending, you could be spending more, if that makes any sense. And then another lesson I've learned is how to hyper-focus. Of course, when you're a CEO, you get loads of things. Everyone in the team, everyone in the different departments asks for your advice. Delegation is key. Trusting who you're working with is key. Hiring well is, I think, one of the most important things ever. You need to hire smarter folks than yourself to do what they can do better than you. And hyper-focus, hiring well, and what did I say?
Drink a lot of beer?
Some bintang.
Yeah, some bintang. Thank you very much. Enjoy the rest of the boot camp.
Thank you.